Russia's central bank may cut interest rates sharply in July 2025. As inflation in Russia slows down, the Bank of Russia may lower its key interest rate by more than 1 percentage point at its next meeting in July 25 if the latest data confirms that inflation is moving toward the 4% target by 2026. This was announced by Deputy Governor Alexei Zabotkin at an economic conference in St. Petersburg. If we see that inflation, the job market, consumer demand, and lending are all moving in the right direction, we could cut the rate more than we did in June, he said. Reminder, in June 2025, the central bank already reduced the rate from 21% to 20%. Now it signals it's ready to further, if the conditions are right. What will be discussed in July? A new forecast for the average key rate for 2025, a review of how fast and how far the rate can be lowered without causing inflation to rise again. Why is this important? The central bank is being mixed signals in the economy. Risks are rising inflation. People still expect prices to go up and those expectations are falling slowly. The job market is tight. It's hard to find workers, which may push wages and prices up in Russia. The economy in Russia is growing faster than expected, which can increase inflation. There is uncertainty in global trade affecting import prices, as the said central bank. Factors that help slow inflation. High rates mean fewer loans and are being taken by people and businesses. Consumer spending is down, people are buying less. And this slows down price growth, which is exactly what the central banks want in Russia. What's the next for the interest rate? If things go well, the central bank may start a longer trend of cutting interest rates. According to Anatoly Aksakov, head of Financial Markets Committee, if there are no external shocks like a sharp jump in the oil prices or new sanctions, then by the end of 2025 the key rate could drop to 13 to 15%. What does this mean for everyday people in Russia? If people plan to take a loan or mortgage, interest rates cuts may start to fall. For investors, bond yields could go down, but stocks and real estate might look more attractive. For the economy, it's a sign that inflation is being brought under control and the central bank is ready to support growth. Russia's central bank is starting to shift its tone. After keeping interest rates high for a long time, it's now open to easing by carefully, only if inflation stays under control. July could be a turning point. The upcoming data on prices, jobs, and consumer activity will decide how fast the rate cuts begin in Russia. Meanwhile, Sberbank in Russia to pay record dividends for 2024, nearly 787 billion rubles. Sberbank's annual shareholder meeting approved a historic decision. The bank will pay 787 billion rubles in dividends, the largest amount in its history. Each common and preferred share will receive 34 ruble. Ex-dividend date July 18. Dividend yield around 11%, based on the closing price on June 27. Common shares 11% yield. That makes Sberbank shares very attractive to investors looking to steady passive income. Profits hits new record again. For the second year in a row, Sberbank set a new record. Net profit for 2024 1.5 trillion rubles. Thanks to this strong performance, Sber continues its generous policy of paying out 50% of net profit as dividends, as set in the new dividend policy adopted in December 2023. And who gets the biggest share? Since 2020, the Russian government is Sberbank's main shareholder. The National Wealth Fund owns 50% plus one share, meaning over 393 billion rubles in dividends will go to the state budget. The rest of the shares are held by private and institutional investors. How did the market react in this? After the news, Sberbank's share slightly dropped. Common shares 316 rubles. However, analysts say this dip is temporary. The strong dividend yield is likely to keep investor interest high. Bottom line, Sberbank continued to show strong profit in Russia, pays generous dividends and remains one of the key players in Russia's stock market. For investors in Russia, it's a clear sign the bank is not only alive, it's food prices in Russia may go down. Russian lawmakers propose cutting tax to 5%. Good news for everyone who buys groceries, which means everyone. A new proposal in the Russian parliament suggests cutting VAT on food from 10% to 5%. If the law is approved, stock prices could drop in the coming months. The bill will be reviewed soon. Its goal to make basic food more affordable and reduce pressure on family budgets. Which products will get cheaper? The lower VAT rate will apply to meat and meat products, not including premium items like veal or fancy sausages. Milk and dairy products, including ice cream, eggs and egg-based products, vegetable oil except palm oil, margarine and cooking fats, sugar and salt, grain and animal feed, bread and baked goods, pasta and grains, fresh fish and fish products, not including expensive types in Russia, baby food and diabetic food, vegetables, potatoes, fruit and berries. Who is in this happening? Why is this happening in Russia? Lowering VAT to 5% would help to reduce food prices in stores because is inflation in Russia. Support families with children and the elderly. Control food inflation. Increase people's buying power. Basic food products may soon become noticeably cheaper if the law passes in Russia. It's still just a proposal, but it was wide support because it affects all citizens. A vote may happen in the upcoming weeks.